Good afternoon, traders and investors. Will back here with another one, coming to with a Monday market recap. Hope everybody had a very beautiful weekend. As per myself, guys, I was away most of the weekend. I really apologize for not being able to upload. Was out camping with friends and family and was hoping to be back in time for the top 5 options plays of the Sunday night video, but it just didn't work out that way. But a quick little note on that, guys. I know the market environment right now has been very negative and very emotionally charged, to say the least, right? If I have one little piece of advice for all of you out there, please never let what's happening in the markets and what's happening to your money affect your personal relationships, right? I know money is a very important thing in life, but just keep in mind, guys, money, it comes, it goes, we can always make it back. However, if you lose relationships over negativity that you take from the markets and then bring into other aspects of your life, sometimes you can't get those relationships back. So please make special note of that and act accordingly, right? Very, very, very important message. Now, in terms of what happened in today's markets, guys, are you guys getting excited to buy these dips or what, right? So today, obviously, guys, another day of sell-off as the recession narrative, and keyword narrative, persists, right? So today we had one of the worst opens since March 2020 of the pandemic crash. The SPY at one point was down today almost about 4% in one single day, and the QQQ was down a lot more at the open here, guys. They were down about 5.25%. Definitely one of the worst days on record, and a lot of that was having to do with the overnight session coming out of Japan. Traders reacting very negatively to last Friday's jobs report, and couple that with the interest rate hike that Japan did last week. It was definitely a recipe for a very negative day, but no one had forecasted the extent of the negativity. So in today's video, guys, we're going to recap exactly what Japan did to us in the overnight session, which resulted in today's drops. Second, we're going to go over a few key factors that I want you guys to focus on during this sell-off and during this market crash, because it's not really a crash yet, right? Focus on during this crash narrative, okay? So we're going to going over some best practices and things to do and what we can do to really best position ourselves to make the most of these dip buying opportunities. And then lastly, guys, of course, we're going to go through our technical analysis. Oh, sorry. Before that, we're going to get into PALANTIR earnings. They coming in with earnings after the bell, and they absolutely crushed it. So we're going to do those. And then after, we're going to take a look at our major technical analysis rundown in terms of our major market indexes, see how those are shaping up after such a brutal day like today. And lastly, dive into our big tech names and see those as well. And finally, we will conclude with a quick glimpse into my portfolio and how I am trading and positioning in this current market environment. So without further ado, guys, a ton of stuff to cover today. Let's jump right into it. So the SPY down, ending 2.91%, erasing a lot of the losses, but not quite everything. QQQ down just under 3% as well. Same thing, erasing almost half the losses, but not quite the whole thing. Now, when you take a look at the heat map, guys, you will see it's a very, very dire situation for the markets, right? A very brutal day, to say the least. Everything down, heavy percentage points, really nothing being spared except for a few names like AMD, mysteriously green on the day, LRCX, KLAC, and Booking.com, just to name a few. But for the most part, guys, you would be very hard pressed to find anything, rotation or not, that was green in the markets today. Take a look at the one-day relative, guys. You can see that even better, where everything in the market is deep in the red. And on the one-week relative, guys, now back-to-back weeks of absolute market destruction. And I say that in the most humble way possible. I know losing money is never fun. Trust me, guys, my portfolios are down too at this point, right? But still, we have to say it as it is. It is really a brutal sell-off right now on the one-week relative. Everything is down tremendously, right? At this point in time, the SPY on a year-to-date performance benchmark is only up about 9.58%. Just a few weeks ago, they were pushing upside of 20%. So just in a few weeks' time, we have erased 50% of all year-to-date gains. And on the QQQs, it is even worse right now. QQQs up only about 7.28%. They were up almost 23% year-to-date. So they've pretty much erased over 65% of all the year-to-date gains in just a few short weeks since that infamous July 11th start of the tech sell-off. So in terms of what exactly happened over the course of today, guys, right? Let's get into some news headlines. Obviously, when stocks drop so much, Number one, it brings up the circuit breaker argument, right? What exactly are circuit breakers? That's what happens when the market drops too much in a given session. We almost hit them today, but not quite. We were still a long way away, guys. Those circuit breakers come at 7, 13, and 20% drops pertaining to the previous close price. So in all reality, we weren't close to hitting them. Those hit them twice in March 2020 during COVID. So definitely not an environment right now for circuit breakers just yet. Now, also keep in mind whether or not we're in a dip, a correction, or a market crash, right? So the definition of a correction is anything above 10% but less than 20%. A crash is a decline of 20% or more. So as you can see in the SPY right now, we are only down, well, at the top of the morning, we were almost down 10%. So the S&P is not quite into correction territory yet. The QQQs, however, they have surpassed that line as of last week. They are now down 15% from the highs. So delving into crash territory maybe in the near term future, but definitely not right now. So in terms of those moves, guys, those have prompted a lot of people to potentially say that maybe since the Federal Reserve is now deemed to be late to cut interest rates, will they possibly do an emergency rate cut to cut rates in this market? Well, guys, in my humble opinion, I really don't think so, guys. The protecting the equities market is really not the Fed's first mandate, right? The Fed's mandates are full employment in the jobs market, and number two, it is obviously controlling inflation. And so far, those two elements, even though they do have their criticisms, so far those elements are withholding the test of time fairly decently in the grand scheme of things, right? So moving on in, let's take a look at how many times the Fed has actually done emergency meetings in terms of rate cuts, right? There's only 7 times that they've stepped in when markets have gotten really bad to pretty much cut interest rates in an emergency way. But just keep in mind, as a pretext to this, guys, the Federal Reserve cutting interest rates in an emergency fashion signals extreme weakness by the Fed and signals that they are ill prepared for what's at hand right now. So essentially, it is showing a very weak hand. It is the last thing that the Federal Reserve wants to do if they can possibly avoid it, right? So that's why I don't think they are going to do it. Definitely not to step in to save the equities market. Why? Because their data points are still good. Q2 GDP we got just 2 weeks ago showed that the economy was still relatively healthy in the grand scheme of things. And unemployment, even though unemployment has been ticking up now to about 4.3%, we are still near historical average lows, right? So those two things combined means that the Federal Reserve doesn't really have to force its hand into any emergency rate cuts just yet. And obviously inflation has been coming steadily down. So they may just be patient and wait for that September meeting for their first rate cut. They've only done it 7 times in prior history, guys, these emergency rate cuts. And you will see those prior markets were a lot worse than where we stand right now. Since 1987, there's been 7 events that have caused it. Number 1 was the famous in the first Black Monday stock market crash of October 1987. Now, when we get into the Japan headlines, you will see that a lot of people say that it's comparable to the Black Monday crash of then because of what happened in Japan. But just a little bit of context here, guys, right? Today, the Nikkei lost 12.4% as a whole. Black Monday, that was a 15% decline. But not only that, on Black Monday, the S&P 500 lost 20% in a single day. The NASDAQ was down 11.5% in a single day. Definitely a far cry from the numbers that we have today, right? So let's get into when have they actually emergency style cut rates. Let's take a look, right? So once in Black Monday right here to remedy that massive stock market destruction of 20% on the S&P in one single day. This is the only instance where the Fed has stepped in to save the equities market as a whole. So anything shy of this probably will not get them. The next emergency rate cut came amidst during the recession in the early 1990s and the first Gulf War. Notice the term recession. They were officially in a recession at that point, something that right now we are not. So far, the recession narrative is only speculation. We do not have it in the data just yet. The next emergency cuts right here, October 1998, off of the implosion of a hedge fund, long-term capital management. So the Federal Reserve usually only cuts interest rates in emergency styles in 2 reasons. Number 1, if ever there's a crisis in the bond market, which usually happens during a recession. That is not happening right now. Number 2 is when you have financial firm collapses, very large financial institution collapses. then they will do them. So far, none of those have been set. So October 1998, we are not there yet. We do not have industry-leading hedge funds collapsing right now. In 2001, the Fed responded separately to two major events, the tech bubble bursting and the horrific September 11 attacks. Now, the tech bubble crash, guys, you probably, maybe some of you are maybe old enough, some of you like myself are way too young, but if you go back and look at the data, guys, the crash of 2001 makes what we're seeing today like a Sunday at church, pretty much, right? It is nothing comparable in terms of the size and magnitude of the drop. So I do not think they will be stepping in right now. You're talking about the NASDAQ and the S&P 500 going down several percentage points every single day for months and months on end. It is definitely not the same type of environment right now. Thereafter, great financial crisis, right? In 2008, that saw two emergency rate cuts just because of the sheer amplitude of those drops, right? You had financial system collapse imminent headlines, right? And those were no joke, and it was real at that time. So they had to step in after a few major bank failures, guys, to save the entire financial markets. Definitely not the case that we're having right now. And lastly, the only time we've seen this in the last couple of years has been during COVID, right? COVID in 2020, twice in March back-to-back from 1.75 all the way down to a quarter percentage point. That was pretty much one of the most aggressive ones that they've ever done. And that's because the economy was literally dead. It was at a complete standstill. Everybody was home. There was lockdowns and everything, and so much uncertainty that the Fed absolutely had to do it. So none of these events look anything like what we are currently seeing today. Today is pure fear and speculation that we may enter into a recession, right? But there is no consensus over the fact that we're entering into a deep form recession. The data just does not support that right now. So what exactly happened in the overnight session here, guys? Maybe I should have started with that first, but we'll get it out of the way right now. So what happened in the overnight session? Why did the Nikkei tumble upon us and send us spiraling down? Take a look at the Nikkei, guys. This was definitely a very, very bad day for them, right? Take a look, 12.4% drop on the Nikkei. Definitely not having a good time. They've pretty much sacrificed all of their year-to-date gains in just a few short weeks here, guys. Talking since the peak of July the 11th, down 26%. Well, I'll just break it down for you guys in the most simple terms as possible, right? So let's take a look at this. The 12.4% loss on the Nikkei was the worst day on the index since the Black Monday of 1987. This all has to do with positioning and interest rates and also market participant greed. So if you don't know the landscape of Japan, I can't really blame you. But let's take a look at it, right? So Japan, for the foreseeable, for the last, number of years here, let's call it about 15 years, have had interest rates almost at zero to stimulate the economy. And that was the case all the way through 2015. 2016, they actually dove into negative interest rate territory to prevent people from saving money, right? It would actually cost you something to save money back here, right? Now, in order to stimulate their economy, because Japan has been having a problem with a stagnating economy now for the past 25 years at this point. So what happened last week, guys, is we had an increase from 0.10, which was the standard arguably for the last 15 years, right? Between minus 0.10 and plus 0.10, all the way up to 0.25. Now that doesn't seem like much, right? However, just keep in mind that when you have an interest rate that is very, very stable, right, for the last 15 years, the last thing that people expect is for you to breach the band, either to the upside or to the downside, right? So what happened, guys, is people, market participants, especially hedge funds and investment banks, were borrowing heavily. Very, very heavily because interest rates were so cheap. What were they doing with that money? Well, they were doing a bunch of different things. They were either investing in different interest rate based assets, such as Euro-dollar bonds, which are basically any bonds of foreign countries denominated in US dollars. And they were also leveraging across different asset classes as a whole, right? Leveraging up to the maximum because the cost of the leverage was very, very cheap. What happens when you get caught with a surprise interest rate hike? Well, obviously you have to start deleveraging those bets, right? Because the cost of money has gone twice as high as it previously was. So they started deleveraging a few bets. And that's what we started seeing as soon as last Thursday session after the Bank of Japan did that. Thursday and the Friday session. Then keep in mind when we got our non-farm payrolls report on the Friday morning, it was nighttime in Japan on the Friday session. And now they responded to it on the Monday morning session. So this deleveraging of bets after a higher interest rate, plus the uncertainty about maybe the US economy coming into a recession, that is what really cascaded the deleveraging into turbo mode. Everybody was smashing the exit button today, which led to broad market capitulation on the Japanese stock market index. This is like the S&P 500 of Japan, right? So that is what fueled the large form sell-off. And after we saw that in Japan, London reacted as well, right? So it goes from Japan, then London reacts, and you can see that as soon as the early hours of the London session. London session usually starts at around 3 in the morning at that point. This is the deleveraging during the London session, really bracing for impact. And then we got our final crush in the early pre-market hours of our own market timing, right? So just a cascading effect across the board. Now, this is just a picture perfect example, right, of market participants who are too greedy that start deleveraging their bets, and then that cascades into pain across the rest of the world. No more, no less, guys. These recession headlines right now are being blown out of proportion, in my humble opinion. The data just does not support it right now. I'm not saying that the data will not eventually support it, but the market is really front-running potential negative data right now, okay? So just keep that in mind. We are not in a recession just yet, and we are definitely not in a market crash just yet either, right? So we have to be very careful. We have to watch this one day and 1 week at a time. We know that August and September are negative seasonality months for the S&P. We know there's been a large rotation out of big tech into more defensive names, and we also know that we have some election uncertainty coming up, right? So a lot of uncertainty factors in the market right now, which means that any piece of negative data will be amplified to the downside. A very, very emotional reaction by the markets just today. But if you were coming into today's session very level-headed with a plan, congratulations, guys. And that comes into my next point, right? So what are we supposed to do, right? Well, if you haven't seen my last Friday's video where I do a full breakdown, whether you're a long-term investor or trader pretty much, go and watch it. It's in the first 10-15 minutes of the video where I do a full breakdown. If you haven't seen it, take a screenshot of this page right now. The one thing that I wanted to say, building upon today, guys, is whenever you see days like this, it is key to remain emotionally neutral. I'm not saying it's easy, but you have to do it. And if you're not able to do it when you wake up and you see these prices, you need to do a plan, guys. I want everybody watching this video right now to derive their plan tonight, not tomorrow, not the day after. Please do it tonight. I have mine written on a piece of paper right here, okay? You need to derive a plan. This is going to be true for long-term investors, as I know most of you are looking to build out long-term portfolios and add to those portfolios. So here is what we have to do right now in the midst of extremely high market uncertainty. We want to be focusing on concentration, the highest quality stocks and ETFs only. Highest quality ETFs can be something like an SCHG or VUG, the growth bound ETFs, right? Or maybe a SPY and QQQ mix. And the highest quality stocks, guys, I've said that a number of times on the channel, right? You want to be focusing on stocks like Amazon, Google, Microsoft, Meta, right? And possible stocks like Visa, MasterCard, stocks like Costco, right? You want to be focusing on the highest quality stocks right now because those are usually the ones that drop the least and recover the fastest. Why? Because they have the best balance sheets, they have the best growth outlooks, and usually they are the ones managing their costs the best, leading into potential economic downturn, right? So, as I said, make a plan now. If you fail to plan, you plan to fail, of course, right? Here's what I want you guys to do right now. Whether you want to buy the S&P, whether you want to buy VUG, whether you want to buy QQQ, whether you want to buy individual names, do this tonight. Now, if this is what you're going to do, write on your piece of paper. If the asset you're looking at drops 15%, you are going to buy X. If it goes down 20%, you are going to buy X. This just prevents your emotions from taking over, right? Today, Microsoft was down 15% from local highs. If you came into this with a plan, you would have had no problem hitting the buy button. Somebody that does not have a plan all of a sudden, when you see numbers like that and you see red all across the screen, tons of media headlines, negative headlines, right? The first thing you're going to do is say, I'm not buying here. It's going to go lower. It's going to go to zero, right? Do not think like that, guys, right? The markets are geared, these algorithms are geared to push maximum pain levels and close you out early. Trust me, there's a lot of math behind this, and they understand the exact science of where is maximum pain for the average investor. They also keep in mind, since they have the data from all of the brokers, because brokers for the most part outsource their order flow, they know where everybody's stop losses are and where most people's average costs are across a broad base of retail brokers. They will push those limits, guys. If they have the headlines to do it, the algorithms will push max pain. It's just the way the markets work. I know it's very predatory and they get fined for that a lot of times, but it's just the way the markets operate. They are manipulated, guys, which is why I say, make a plan, guys. If it drops X, I will buy X. If it drops Y, I will buy Y, right? You want to set defined levels where you are looking to dollar cost average into these names, okay? Very, very, very important. Now, that is for the highest quality stocks. Now, for the second tier plays, guys, such as Uber, Airbnb, SMCI, Square, Palantir, and the list goes on, right? Infinity other, B quality stocks, right? Tons of other very good quality stocks, but they're just not on the same level of predictability and essentially a high quality, the quality of them, right, is not on the same level as something like a Microsoft or a MasterCard, right? So anything under that, you want to be going slow and small. Do not blow all of your cash right away. You're going to see some tremendous dip buying opportunities across all of these names here, guys, right? They are the most volatile ones. So please go slow and small, but still make a plan, right? Now, number 2 on these small plays, I am not going to be considering leap options yet. I know it's the first thing that people look at when things drop a lot, and when you're down a lot of money, you think, first thing you think of is call options. How can I make all this money back and more extremely quickly from a very nice bounce? Well, guys, take a look at this, okay? The QQQs have literally just lost the weekly uptrend, and we are on the verge potentially of losing the monthly uptrend as well. If anything, we're going to get some long form consolidation. Very, very improbable that we just V-shape recovery this. It may just be a slow and drawn out recovery process, and that is if we don't drop a lot more. If we drop a lot more, the recovery process is even going to be longer, guys. We have potentially weeks, potentially even months of this consolidation underway. I'm not saying for months we're just going to drop like this, but we can have some uncertainty consolidation now for months and months and months in the future, right? Maybe 2-3 months until the election cycle is done. So that's why I am not considering the leap call options just yet. Volatility is way too high. I'm going to be waiting for a recapture of weekly uptrends, right? When you see the indexes recapture some weekly uptrends, that is when I'll start looking at some individual names like Square. If you really like Square, right, keep in mind, everything's in a downtrend right now. We cannot be playing those call options like upside momentum. I know you want to be trying to find reversal points, guys, but don't try to pick bottoms in terms of when the markets are in a recession narrative. Is just a quick recipe to be getting destroyed. I will tell you when I am personally buying call options, right? And you can base yourselves off of that. I'm not saying I'm the best trader in the world and that I will perfectly be able to time the reversal point, but I just want to get you guys out of the notion of gambling, right? We are not in the business of gambling. Please be waiting for confirmations that you have the higher time frames back and that you have momentum. That is when we're looking for long-term leap call options. So hopefully that makes sense for each and every one of you guys, right? So as I said on the channel, as we do best, we're going to take this one day at a time and 1 week at a time. And if you want to see how I am trading these markets and how I am buying companies, I'll be doing this section at the end of today's video, right? So that is pretty much it for the massive introduction into today's video. Hopefully you guys appreciated that. Now, let's dive into some earnings, shall we? So now we're going to cover PALANTIR earnings. And PALANTIR actually had some amazing earnings today, okay? So they were up pretty much 12% right now in the after hours, blowing everything out of the water here, guys. PALANTIR was down at one point today from the open to the peak of the brutal sell-off this morning, 14%, and now they are sitting in the after hours at around $27 right now. So such a huge swing intraday by PALANTIR, over 30% bottom to top swing, right? Very, very beautiful quarter for them. Why are they up so heavily in the after hours? triple beat. Not only did they beat on EPS by 12.18%, beat on revenue by almost 4%, but they increased all of the guidance. And that is what the market is looking for right now, guys. You need triple beats. You need to beat this quarter and you need to give excessively good guidance for the market to reward you. So it shows that market upside after earnings is still possible, but you need a triple beat, especially the guidance in a period of economic uncertainty right now, recession narratives left, right, and center, right? You need to have upbeat guidance. If not, the market is going to say, well, this company can't perform in an economic contraction cycle, so we're just going to crush their stock, right? So that being the case, let's go over a few of Palantir's headlines, and they were very, very good, guys. So Palantir stock surges as unrelenting AI demand fuels earnings beat. Let's have a look. So the CEO, Alex Karp, said previously people might have questioned whether or not Palantir's playbook would work. He told MarketWatch on Monday, on this day, you see the numbers and you say, oh, they were right. And he is right, guys. It is true. They are really doing a good job on executing their defined plan. We're going to get into that later. Those numbers include second quarter revenue of $678 million, up 27% from a year ago, and ahead of the $653 million consensus. So beat on consensus right there. Karp's shareholder letter called out an unrelenting wave of demand from customers for AI systems that go beyond the merely performative and academic. The company posted $307 million in commercial revenue, up 33% from a year before. U.S. commercial revenue was up 55%. This was one of the main criticisms of Palantir for the last couple of years. They only have government contracts. Well, now their commercial revenue is actually coming up, increasing quicker than their government contracts. They're expanding their lines of businesses and really addressing everybody's criticisms in the process. Very healthy growth on the commercial side for them. The bigger top line beat came in the government business, where revenue was up 23% from a year before to come at $371 million. So before, guys, Palantir almost only had government revenue, right? Now their commercial revenue is almost half of their entire revenue. Very good revenue mix now. Analysts were modeling lower, 349. So they beat on that as well. Everyone underestimates what it takes to deploy enterprise software and AI software at scale, said the chief revenue officer. While other companies have found it very easy to build prototypes, Palantir is actually deploying things in production and relying on its 2 decades of experience in doing so. There's only 2 companies that do what they do, guys, in terms of data management and machine learning for in-house data services, and that is Palantir and Snowflake. Nobody else is in this game right now. There's a few players who are kind of in the game, but the only 2 who have working products that really deliver corporate-wide efficiency gains are Palantir and Snowflake. Now, Palantir's revenue outlook for the third quarter, here's your guidance, calls for 697 to 701 million, while analysts are expecting 681. So you can see very nice increase, guys, almost pretty much, let's call it about 3-4% increase in revenue guidance. Very good. Palantir also now expects at least 47% growth in U.S. commercial business for the full year, while the forecast was 45%. So they're really increasing guidance on everything, guys. That's why it was such a beautiful report. Here's what the chief revenue officer had to continue on. What gives me confidence is what I'm hearing from our customers and how we are unique in the ways that we're having meaningful, very real impacts for our customers. The steady ascent of our profit reflects the unbridled demand for understanding of the capabilities of our software, said Alex Karp. So very bullish earnings report as a whole, guys. And the one thing that I want to focus on Palantir here is their profitability. We cannot ignore their profitability. Palantir in the past, take a look right here, you can see their net margins were not good. Up until last year, this company was not profitable, guys, and now they're turning a corner to profitability. They now have 8 quarters in a row of positive EPS expansion, and net margins right now are getting very, very good, guys. You can see here net increases in the last 3 quarters, 12.81%, 15.5%, 16.5%. Well, now this most recent quarter, guys, they're above 20% in net margins. That is definitely the story of the day for Palantir. Few of their applications, guys, right? So they're working with Panasonic Energy, increasing line uptime, decreasing rejects, and ensuring more efficiency production of billions of EV car batteries each year. Now, they also have U.S. commercial partnerships with hospitals. Here's what Tampa General Hospital had to say. We've reduced patient length of stay by 30%. We've also saved hundreds of additional lives through this work. What Palantir does, guys, is if it goes through all of the data points of a single given company or entity and tries and derives either parallels or points of efficiency that can be improved, right? So it is complete AI going through all of these data points, trying to find trends, what's working, what's not working, and then it proposes solutions to these problems. Very high level stuff, guys. As I said, they are pretty much one and only in the game with Snowflake right now, right? So moving on to their financials, guys, extremely good. We've already went over a few of them, but let's continue, right? What I want to highlight here, 83% year over year US commercial customer count, very, very good. 103% in US commercial remaining deal value in the pipeline. That is very, very solid as well. Very, very good amount of deals closed. And their total contract value is up as well. Here is the highlight of the whole report, guys. It has to be the GAAP net income, now highly profitable and expanding profitability as well. Take a look at this profit graph right now on Palantir, right? So here's your profit margins over the last couple of years. Here is your gross margins. Gross margins are improving, very, very good. So they're getting more efficient at managing cost of goods sold. Then you have operating margin expanding as well, now into profitable territory. This is now going to be much higher this quarter. And trailing 12 months net margin as well. You can see 12.79. This should be sitting around 15% right now. So you can see Palantir really going from a operating loss company to not only an operating profit company, but also a bottom line net margin company as well. Decent free cash flow. And now they have no debt at all, building up a very solid amount of cash, right? So commercial revenue growth, US commercial growth, you can see very, very healthy numbers right there. In terms of government growth as well. Not going to spend too much time over this, guys. Just want to go through the slides a little bit. US customer count is netly increasing on year-to-year basis, right? And then we also have the total customer count and total commercial customer count. You can see net increases, no slowdown at all. 96 deals of at least 1 million, very, very good. And we ended Q2 with $4 billion in cash and cash equivalents. So the business is healthy, guys. Margins are now positive and expanding. They have a lot of cash and no debt to speak of. Now, in terms of the valuation, right? This is the only concern that we have with Palantir stock, especially when it's trading around the $27 range in the after hours right now. Is it still a good deal at $27? Well, let's have a look. They're growing revenue 16% per year. Very, very good. And EPS growth at 26% per year. Very good as well. Where do they stand in terms of valuation right now? Well, at $27, they have a PE ratio of 81. At a first glance, that appears high, which is why we divide this by the EPS growth rate. But even with such a high EPS growth rate, guys, at 27, their PEG ratio is 3.14. Anything below 1 is good, or really good actually. Anything between 1 and 2 is okay. You want to be closer to 1, of course. Anything above 2, you have to start asking yourself some questions. And at 3.14, guys, unfortunately, this is just not the best deal at all. So this is another case of a company that I really love. The fundamentals of the company are going in the right direction. What is not going in the right direction, guys? Or sorry, what is the one drawback of this stock right now is the valuation. At 3.14, it's a little bit too high. Taking into consideration their main competitor right now that has gotten crushed, right? Snowflake has always had a problem with valuations as well. Look at Snowflake, right? They are down tremendously from the all-time highs. Now down arguably, I mean, just at a quick glance, this has to be around 75% off the all-time highs, right? Yeah, exactly that. 75% off the all-time highs. And still, even with their amazing EPS growth rate at $114 all the way down here, look at the PEG ratio, 5.17. So this company is far more expensive than Palantir, right? So Palantir remains my favorite AI play, yes. But the valuation, you have to be a little bit cautious up here, right? Can we buy a tiny bit up here? Yes, but I would be very, very careful, especially with the overall market uncertainty right now. I would not be surprised if Palantir just starts giving back a little bit of these earnings gains as a whole, guys. It's a great company, but keep in mind, it cannot do it alone, right? When the rest of the market looks like this, Palantir will not start doing leaps and bounds like this, guys. It is just impossible, right? It's correlated with the rest of big tech. So I, for one, would be patient on this one as a whole. I did write some short puts all the way down here early on in the morning in the event it came down there, because all the way down there, that's when your PEG ratio gets really, really juicy, right? If we come off, $27 all the way back down to roughly 20, that's 23% off, right? Which would bring this PEG ratio down about 2.5. That's more manageable for Palantir. But at 3.14, unfortunately, especially in terms of market uncertainty right now, it is a pass. If I have shares from prior like I do, it is a hold. But adding more up here, I think we can be patient over the next few weeks, next few months, and find this one a little bit lower. Not because the company is not performing well, but maybe just because the rest of the markets are just not performing well either, right? So those are my thoughts on Palantir. Excessively good earnings, to say the least. Congratulations to all Palantir bulls out there. Now let's get into the juicy stuff, shall we? So in terms of technical analysis, guys, right? Well, the technical analysis right now is not looking too pretty for the bulls, but we are coming up on a few daily oversold levels that may provide us some temporary relief. SPY does not hit daily oversold that often. Take a look right here, daily oversold conditions. We hit them back in month of April, pretty much daily oversold, and we got a nice little bounce, which translated into further gains, right? However, there's a little bit of a problem right now, guys. Well, back in October as well, before we get into the problem, daily oversold, nice little bounce, daily oversold here, nice little bounce. But you guys can see sometimes when we get daily oversold bounces, just like this one right here, when the markets were not in a favorable overall environment, we get the daily oversold bounces, but it just translates to further declines down the road. And that is going to be the main crux of my argument right now. We may just be looking for bounces, but they are only that. They just will be bounces. With the size of this move down, guys, we will need to get a heck of a bounce to get the bulls back in position to reset the daily uptrend. In my humble opinion, that just may not be the case. Usually when you see very aggressive moves down like this, we get a lower high, then make a lower low on a shorter leg, and that's when the bulls can then reverse something like this, right? But usually when you have a massive leg down like this, it is virtually impossible for them to get a really nice bounce, right? That is just the fact of the matter in my humble experience. You can go back in time and check all the times that this has happened, especially during 2020 when we have brutal sell-offs like this, or even 2022, right? So keeping that in mind right now, when we get a bounce, and when will you know we get a bounce, guys? Something like this is manifesting, right? Hourly uptrend. So now you can see hourly uptrend formation. If we break today's high in the overnight session into tomorrow, we will have a daily bounce underway. Then we measure the size of the bounce, guys. Size of the bounce is key. We will need to see at least a 50% bounce for the bulls to have a chance at resetting this into some form of a daily uptrend to then perhaps be able to regain a little bit of this weekly sell-off level right here and get a weekly bounce undergoing, right? So that is the moral of the story, guys. Need to see a 50% bounce on the SPY for them to have a chance at resetting the daily uptrend. Then if we do get a daily uptrend, same logic applies. We measure the size of the weekly retracement to derive whether or not the bulls can reverse this into a weekly uptrend, as they of course have now lost the weekly uptrend by fracturing these lows on the course of the day today, right? So the bulls have now lost a lot of time frames. They have lost the weekly, they lost the daily a while ago, right? But they've now lost the weekly, which pretty much foregoes any chance at a recovery. Keep any chance at pretty much a V-shaped recovery, right? Keep in mind, the last times that we lose weekly levels like this, we can recapture them, guys. And I've highlighted one area right here, right? Where we do have such a heavy dip right there. You can see when we lose a weekly uptrend in such a brutal fashion, you can get a little bit of upwards momentum, but oftentimes it does get met with further downside selling. So it's very, very unfortunate sometimes like that. That is just the way the markets work. Sometimes when you lose the higher time frames, guys, usually it takes a while to settle out. Then you get one tiny leg, which the bulls can engulf and then reset everything, right? To get back like this, guys, you're going to need some extremely positive data to change everybody's mindsets in the market right now, right? So that being said, daily downtrend is heavily underway. We are just looking for the size of the bounce and then probably looking for just a lower high and maybe lower low. Keep in mind, a lot of resistance above us right now, pretty much this area right here, 522 up to about 530 could be a nice resistance pocket, lower high into maybe lower low. So if I was looking for any short form setups, I would be looking all the way up here on the rise to potentially get a little bit of sell down continuation by the bulls. And for that, guys, we're going to be looking for hourly overbought conditions, right? As I was saying in last week's video, we want to be looking for, if we're looking for shorts, we want to be looking for overbought and oversold conditions, right? I think I wrote it somewhere in here right there. So we want to be looking for overbought or oversold conditions to be entering these trades, right? So for the oversold bounces such as today, that is when we can start entering a little bit of positions. When we get conditions that are absolutely crushed, crazy 1 hour conditions, crazy 4 hour conditions, and into daily oversold. And then when we get nice bounces, right? Aggressive bounces off these sells, look for hourly overbought conditions, and that could be the cue to maybe start a little bit of a short form position into the rest of maybe further sell down. So that's just the way that I'd be looking to play the SPY myself. Moving into the QQQs right now. So QQQs also, really coming down on the day hard, right? So we're going to need a heck of a bounce. Daily downtrend is clearly in motion right now, right? New downswing in motion, and we pretty much cracked below the big area of support that I did not want us to lose, right? Huge area, 452 down to about 434. Keep in mind, this area now is overhead resistance, so we will not be able to get through it that easily, in my humble opinion, okay? So we need to keep an eye on the hourly trend. Hourly trend is now looking good. If we continue that into tomorrow's session, daily bounce is officially underway. Then we need to measure the size of the bounce, guys, and it's going to take a good one all the way up to here. 450. If we can bounce all the way up to 450, the bulls might have a chance at being able to reset into a daily uptrend and start erasing a little bit of this weekly damage, right? But with such a heavy move down on the weekly, guys, may just be time for a weekly lower high and then maybe revisit the lows. Same thing as we got right here, right? So just keep that in mind, guys. Any bounces right now are probably going to be looking for further shorts to pile on, especially in the midst of market uncertainty. So please keep that in mind on the QQQs. That being said, daily oversold conditions were met this morning for that little bit of a bounce. That was looking like a very good trade, which is why I said, guys, this morning when we have peak fear, right? Peak fear, peak sell-off, you at least have to try, right? Even if you're not comfortable with it, guys, especially whether you're a trader or a long-term investor, especially the long-term investors out there, guys, you have to try these dips, right? Please try these dips. I don't care if you try it with $10. If you want to buy, everybody has access to fractional shares right now. If you want to buy $10 of Microsoft, guys, you can buy $10 of Microsoft. Just please at least buy something. Get into the good habits of buying extreme fear, countering the trend, right? When everybody is fearful, right? When everybody is saying that the sky is falling, the recession is here, and that markets are going to zero pretty much, get comfortable buying because it will pay off in the long term. You guys know it always does, guys. Just zoom out. When in doubt, always zoom out, guys. These things will correct themselves so long as you're buying the highest quality companies or the best indexes out there, right? So keep that in mind. Moving into financials right now. So definitely financials, there was absolutely no rotation to be had today whatsoever. Financials really coming down hard as a whole. So obviously right now, daily uptrend is fully lost at this point. And with such a heavy momentum to the downside, guys, eventually we will be met with heavy oversold conditions on the 1 hour, heavy oversold conditions on the 4 hour, and we will get a bounce from the bulls. Same logic applies. If we do get an hourly uptrend in motion, you will then measure the size of this daily bounce. And on the XLF, guys, keep in mind we have to come at least to 50%, 42.35 to have a good chance of resetting this into a daily uptrend. Anything short of that, guys, and it's just going to be too weak, and the bulls will have, and the bears will have such an easy time of rolling these markets over. That being said, we are reacting to our last area of support down there. This is an important one, guys. 40.5. Why is it so important? Well, number one is your weekly higher low levels. Lose this one, and you lose the weekly uptrend. Couple that with the fact, guys, we're coming dangerously close to the monthly levels as well. Those are a bit lower at around 39.74. Lose those, and unfortunately, you lose the monthly uptrend as well. So financials really coming under the gun now. Curious to see if they can really salvage this move right here, or if ever we come undone here, guys, we may just need to wait until that September rate cut. Now, financials are a bit funny. Sometimes they can lose the monthly uptrends and still then recapture, thereafter. However, when you lose monthlies, guys, it then just takes more time to do this, right? When the trend is in your backs, then you can get the continuation process of higher highs and higher lows. When you lose the higher lows on the monthly, guys, yes, you can reset them, but usually it takes a two-step process, which on a monthly time frame can take 2, 3, 4, 5 months, right? So be very mindful of that on XLF. My two favorite names, I will not be touching the banks just yet because the banks have run a lot. I will, however, be touching MasterCard and Visa. If we continue MasterCard down 440 down to 425, love this level and lower on MasterCard and Visa, just the same, right? If we come down into the lower 250s all the way down to about 245, I will be buying those dips on Visa and MasterCard, two of my favorite financial names in the whole industry. Moving into XLV right now. So XLV also tumbling on the day. No rotation there to speak of after holding up the markets the better part of the last 2 weeks. even they had a little bit of sell down. So daily uptrend was in motion, and now we've lost it by cutting these higher lows right here. So the logic is as follows. Daily uptrend is now lost. We might just be looking for a lower high and maybe revisit the lows. Keep in mind, you'll be looking for oversold conditions. So far, none of those are met on the 1 hour, and also none of those are met on the 4 hour too. So can healthcare drop a little bit more? Absolutely. But as soon as you see an hourly time frame reversal, that is when you know your daily lows are set. And then we're going to look for the size of the bounce, and then you measure the size of the bounce, of course. However, we are looking good on the higher timeframes on healthcare. Even though we've lost the daily temporarily, what have we not lost? We have not lost the weekly, still a very nice weekly uptrend, and still coming into a very big area of support right here, 147 down to about 144. So still a little bit of margin of error to work with on XLV. And the monthly still has a decent amount of space, anything above 138, looking for that monthly higher low for potential further trend continuation. Usually healthcare does quite well amidst recession narratives or even in economic downturns. So I wouldn't be too nervous about healthcare names out there. They still have a decent amount of cushion left for your bulls out there. We'll keep an eye on this one day at a time, guys. Now, moving into semiconductors, give me a quick second. Moving into semiconductors, guys, down 2.34%. So very, very bad day for semiconductors as a whole. So daily downtrend on this one simply continues. New leg to the downside. And once again, guys, even though we have tremendous selling pressure, still barely daily oversold, guys. This is not daily oversold. Why? Because we're coming down off of such rich levels, right? If we were coming down at the midpoint on the RSI, then we would definitely be heavily oversold right now. But so far, we are not daily oversold. So keep an eye on the hourly trend shift. Hourly trend to the bulls, then you will have an official daily bounce underway, and you measure the size of that bounce here, guys. We will need a bounce at least to 225, get us up to 225, and we can talk about the bull's capacity to reset into a daily uptrend. But anything under that, guys, will be an opportunity for the bears to just send this one for another leg lower. Keep in mind this area above us now, I have to switch all of these to red. Unfortunately, now will be an area of resistance, talking about 238 up to about 225. That is literally where I pointed out the 50% retracement. So could we see lower high and then maybe retest of these lows? Very probable for semiconductors, guys. They are out of favor right now as a whole, except for a few key names that have said that the end of 2024 would be good for them, like TSMC and AMD. The rest of the industry is in a little bit of cyclical downturn right now, with only an upswing coming at the beginning of 2025. So be very patient with semiconductors as a whole, guys. After we get through this analysis, I'm going to go through a bunch of names, okay? So moving into the weekly, guys, you can see we are very, very close, guys, to our big level of support down here. That is a monthly level. So weekly downtrend is clear as day. Nowhere close to daily oversold. Look at this volume, guys. This is maximum exodus out of this trade coming into the last area of support right here, which is pretty much your $200 psychological level, which is also a monthly levels, guys. A monthly level, right? If you lose this monthly uptrend right there, right, it's going to be very, very tough and very, very long for the bulls to recapture. I'm not saying that it's going to do this, okay? The bulls will be able to recapture this, especially towards the end of Q4 or the beginning and the end of Q4, right? They will be able to do it, but it will take a two-step process, and a two-step process on a monthly chart, guys, takes 2, 3, 4 months. These are monthly candles. If you lose the monthly uptrend, takes at least 2, 3, 4 months to reset the monthly uptrending pattern in bullish momentum fashion, right? And that is the same thing with a lot of semiconductor names out there that have now lost monthly timeframes. Now, the only names that I am buying dips on in the entire semiconductor industry right now are going to be the following names here, guys, right? Number one, AVGO. You'll notice these 4 names are all industry leaders. Nothing less than industry leaders, right? So Broadcom right now, I do like Broadcom. If we come down, once again, down 125 towards maybe as low as 100, this whole zone right here is going to be my buying opportunity level on AVGO. They still do have the monthly uptrend, but if they lose that lower than 120 down in my 100 area, it's going to take a long time to recover, but at least you're going with an industry leader. Another one, guys, is ASML. They have an utmost monopoly on their market. They have now lost the monthly uptrend. Big area of support down here. If I can pick this one in the lower 700s, 750 down to 700, the valuation is extremely good. That was at 932. All the way down here in the 700s, your PEG ratio is going to be closer to a 1. Very solid company, guys. But even this one has lost the monthly. So some of your industry leaders, guys, are coming down. And if the industry leaders are coming down, what do you think the rest are going to do, guys? They're going to do the exact same thing. ASML, I like that one a lot down there. TSMC, right? TSMC has not lost the monthly. They still have a wide margin of error left, but we are coming down into a big area of support. Oops, excuse me. I like TSMC, guys, down here, right? 125 pretty much down to this 110 area of big support. That is the previous support of the prior all-time highs. If the markets continue selling down, that is where I want to be picking up a lot more TSMC. Let's call it 130 down to 110. Pace yourself on the buys, another industry leader. And the other one is going to be NVIDIA, guys. And I apologize for these levels. You guys might not like them. This is just where I'm buying, guys, right? I am only going to buy NVIDIA, guys, if I see $85 to $75. It may get there, it may not. I'm just saying that I am going to buy down there. That is when they would be in jeopardy of losing the monthly uptrend as well. Keep in mind, they do have earnings coming up in the month of August at the end of the month as well. But I do think, guys, that with valuation concerns around NVIDIA and with tech being out of favor right now, it can just grind lower. Can we get a bounce from here? Sure. But nothing prevents us from grinding lower thereafter. So I want to be patient with this one. I'll be running short puts, guys, in the mid 80s to mid $70 range. And if I ever get assigned, perfect. If not, I'll just keep collecting premium. That is how I'm going to be playing NVIDIA. Nothing else is going to get my money, guys. Micron, great company. Decent valuation right down here, right? But can't deny that they've lost pretty much every time frame under the sun right now. They're coming into a nice little level right here, down below 100, right? This whole 90 down to about 77 level is a pretty decent one to be starting to build a position. But if the rest of the market leaders don't cooperate, guys, this one is not going anywhere anytime soon. Long-term position, maybe, but I would nibble extremely, extremely small, just based on the fact we have oversold conditions, right? But can we continue to slide, guys? Absolutely. SMCI. This one, guys, has such a niche product. This one was the trade of 2023 and 2024 as well, right? However, guys, I'm just not convinced, right? They don't have a groundbreaking product. They literally only manufacture server racks and cooling. If demand and growth slows for your major market players, such as NVIDIA, right? What do you think is going to happen to SMCI? This is not a legacy company. A trade, perhaps, but not a legacy company. I am not going to be touching this one at all. ARM, even though it is sold off. ARM, right? We went through those earnings last week. Valuation concerns, even at these levels here, guys. Very, very high valuation, even at $110. I love the company, love what they do. I do not like the share price. In times of market uncertainty, in times of market recession and crash narratives, the ones with the highest valuations usually are the ones that tumble the most. And it's not to say that they can't recover, guys, but what's to say that they can't do something like this and have a long form bottoming out process? Be patient with these. We're not expecting V-shaped recoveries. We will have a lot of times to pick up these dips. I just won't be playing anything under the highest quality names of every single industry, guys, right? And that is just the same for everything in the semiconductor industry as a whole. So hopefully that makes sense for all semiconductor plays. I'm not saying, you can play them if you want. None of this is financial advice as a whole, right? But just keep in mind, if your industry leaders can't keep it up, what do you think is going to happen to the secondary plays? Probably nothing good, right? Moving on down, moving into IWM Russell. So IWM Russell also down 3.22% today, not having the best day at all, right? So the Russell going to be an out of favor trade moving forward in the foreseeable future as well, just because of the fact that now we are in a recession narrative. So obviously growth and small caps is not going to perform the best. That being said, they have lost now all of the momentum prior. Daily downtrend is now sufficiently underway. Once again, we'll be watching for the size of the bounce. So far, no key bounce to speak of, right? Yes, hourly uptrend, but look at the size of this move down, guys. It's going to take a heck of a bounce to get this back from the highs. You'll need to get at least as high as 212, which would be asking the Russell to blast through this level of resistance now, which in my humble opinion is probably not going to be, a very favorable endeavor for the bulls, right? If anything, probably just get rejected here and then maybe just revisit these lows. That being said, we are coming into a big area of support right now, pretty much all the way down to about 190. I would not be surprised if we just grind lower, maybe even set a weekly downtrend and come right back into this 190 area, maybe even lower. I'm not playing this one at all, guys. It is definitely not the first pick in a recession narrative at all. So be very, very careful if you are playing the Russell specifically. Moving into the Dow Jones right now. Dow Jones down about 2.6%, one of its worst days. Well, I've been one of the worst weeks for the Dow Jones in a very long time, guys. Dow Jones losing all of the structure, right? So trying for the daily trend change attempt, couldn't get it done, roll over by the bears, and now a very sizable move. At least we're coming into support right now. 38,600 down to about 38,200. So when we do get an hourly bounce, guys, keep an eye, watch the hourly uptrend. If we get that into tomorrow's session, then you're going to be looking for a daily bounce. Just keep in mind, looking for a daily lower high and maybe revisit of these lows. The size of the bounce is going to be key across all of these things. That's why we say we're going to take this one day at a time. Weekly, still holding the weekly, guys. Weekly higher lows are right here, 38,000. So we are still in a weekly uptrend, guys, but the best case scenario for the bulls at this point may just be a tightening range. Very difficult when you get an 80% retracement, guys. Very difficult to V-shape a move like that. Best case is tightening range. The worst case is obviously your weekly time frame rollover. So we'll take this one day at a time on the Dow Jones as well. Then obviously you look, the VIX, guys, the VIX had one of its most explosive, actually the most explosive day on the VIX in the entire history of the VIX, more than COVID. This one was up tremendously at one point at the open, guys, up 185%. You have seen history today in terms of volatility. You've never seen a day like this, guys. You can go back. You guys want to see COVID? Even COVID was not as bad as this. You do not see one single day where we're up 186% bottom to top, guys. It just did not happen. You can even go back into 2008, the great financial crisis. These candles right here, you would not find a single day move of over 180%. So you've just witnessed history across a couple of things today. That being said, these levels are definitely not manageable over the long term. You can see that for the most part, even when we're at a time like COVID, where uncertainty, the entire economy is shut down, right? The extent that the VIX lasts up here was 4 weeks before embarking on its decline. I do believe this one will be a lot shorter. So maybe we continue this week a little bit elevated, but I do believe in the foreseeable next coming weeks, guys, we are going to start retracing these levels. These levels are associated usually with the highest levels of uncertainty. And right now, we just don't have that right now, guys. Do we have certain little red flag points in economic data? Yes. But is there extreme high levels of uncertainty right now in the markets? No, nothing like any of the prior times where we were at these levels. You cannot compare this to 2020, and you definitely cannot compare this to 2008, right? So this was a good opportunity. These are the levels that I shorted the VIX at this morning, and I will be holding that trade for the foreseeable future, right? Now, moving on down, guys, let's go through our big tech names, shall we? So moving on to big tech, moving into Apple right now. Apple down about 4.82%. This one, in my humble opinion, guys, was bolstered by pretty much your buybacks, right? So I know Warren Buffett as well. Warren Buffett sold 50% of his Apple stake. That we definitely have to talk about right now. And there's a very simple reason that he sold it here, guys. You have to remember that Warren Buffett acquired most of this stock all the way back in roughly, the tail end of 2016 into beginning of 2017. The share price back there was like in the mid $20 range, right? So he is up a tremendous amount on his holdings right now. And you guys know Warren Buffett usually likes buying things when they are at extreme discounted levels. At that point, from the highs of Apple down to when he bought it, Apple was down 31%. And the valuation back then on Apple was a lot more manageable. I was in the markets back then too. Apple's, traditional PE ratio at that point in time was in the low teens, right? It was anywhere between 15 and 20 at the highs. Definitely not what it is right now in the higher 30s. And now the problems with Apple right now are currently as we're seeing, right? They do have increased competition and they do have very slow revenue growth. So very normal for someone like Warren Buffett to be taking profits out of a long-term position. Now, keep in mind, this is still Warren Buffett's largest holding, right? It's just he trimmed it by 50%. But Warren Buffett has been trimming stocks by 50% for a very long time. It's just this one gets a lot more headlines because it's Apple and because it's a huge stake for him, right? But he does still have a decent stake of around 80-some billion dollars. But that was definitely the headline of the weekend for Apple stock, right? Keep in mind, we just had their earnings though. Services was the highlight, continued weakness in China, and they do have a growing, increasing amount of competition in that market as well, right? And the revenue growth just isn't fantastic anymore. So for all those reasons, guys, I do not, I can't say anything bad about Warren Buffett's sells, right? He's one of the greatest investors of all times, guys. He knows how to buy things at the right prices, and he definitely knows how to sell things at the right prices as well. So that is pretty much everything for that recap on the Warren Buffett news. That being said, guys, today, I'm pretty sure was bolstered by buybacks. There's no reason in my mind that this stock could be down, from the open to the height of today's sell-off, 11%, guys. Especially at these current PEG ratios, with the fact that Warren Buffett sold and everything, all the negative headlines with a PEG ratio of 3.08. I would be highly surprised if this was retail. If anything, I do think that this was largely due to a lot of corporate buybacks today, those of which have resumed this week, by the way. So Apple getting a nice little pump, but I think it's a little bit of an artificial pump if you ask me, right? So daily downtrend on Apple, clear as day right now, just possibly looking for a lower high. So let's look at the size of the bounce here, guys. Decent little bounce on Apple, now almost the 618 level. So the bulls do have a sizable enough bounce to perhaps set up for the daily trend change. We will keep an eye on that, guys. Watch the hourly time frame. As soon as we lose this hourly time frame, you know your daily bounce is done, and then we measure the size of the bounce. If they can get back up here, guys, 215 to 220, this resistance area, they will be set up very nicely for a potential daily trend change back to the bulls, right? But if ever the markets continue their weakness, guys, I would not be surprised if even if they get a tremendous bounce, it maybe even gets eroded, goes against the probabilities and just erodes with overall broad market weakness. So keep that in mind, guys. If the S&P and the QQQs cannot set up for their own daily uptrends, Apple will not do it either. So keep that in mind, guys, right? On the weekly, loss of the weekly time frame as well. That is notable. So now at this point, we might just be looking for weekly lower high and maybe weekly lower low. I'm still interested in playing Apple short puts on some oversold conditions. If we start revisiting the lower 190 range, above 200, guys, I'm just not playing the stock. The valuation, in my humble opinion, is just too high with the current economic uncertainty. Moving into AMD. AMD up, one of the only green names on the market today, finally getting a little bit of love, right? After such a brutal last couple of weeks on AMD. So AMD finally getting a little bit of a bounce underway. So daily downswing was clear as day. If you want the bulls to reverse this into a daily uptrend, watch the hourly trend and the size of the bounce. So obviously hourly uptrend nicely in motion as of currently. And we'll be watching for the size of the bounce. Size of the bounce right now is fairly decent, above 50%. So the bulls have given themselves a chance right now at resetting the daily uptrend. Keep in mind, though, we are battling right now with resistance. Since we broke through this morning, I now have to unfortunately move this into a red box rather than a green one, right? And that is pretty much what is going to be preventing us from really going on a tremendous rally in the next few days, right? Can we see some further upside? Yes, but keep a very close eye on the top end of this range, 142. Fail 142, guys, and we may just be going into, at best, a tightening range. Worst case scenario, we just roll this over, unfortunately, for the AMD bulls, right? On the weekly, the reason I say that I wouldn't be surprised if we even roll over this bounce, guys, the weekly timeframes on everything, guys, are just not looking the best, right? Weekly, a huge downswing momentum right now, may just be looking for a weekly lower high into weekly lower lows. Potentially, I really start getting interested on AMD if we come down here below 120 down to about 110. I do believe if we are patient enough, if the rest of the markets do not cooperate and we continue selling down, guys, this is really where I want to go shopping for AMD myself. And if the markets recover, guys, and we reset price levels to the upside, that is fine. At least I want to wait for confirmation. We're not in the business of catching falling knives, right? So pay special attention to that level right down here on AMD. Moving on to Amazon right now. So Amazon also getting completely destroyed today, down about 4.1%. They were down a lot more today, right? They were down at one point almost 10% again, but recovering fairly nicely. So we will see if this bounce can continue into tomorrow. Hourly uptrend is now in motion. Lets us know our daily bounce is underway, but look how much space the bulls have to cover, guys. Do you think that they can V-shape this? Probably not, right? We're probably expecting a lower high, and then it's up to the bulls to prove to us, can they get this daily uptrend back? So watch for the size of the bounce, guys. They need to get a good one. Need to get at least as high as 171. Get us up to 171, and we can talk about the bulls' ability to reset this into a daily uptrend. Anything under that will most likely result in a revisit of the lower range. So be patient on Amazon is the moral of the story. Anything pretty much at these lower levels is a decent buy. Amazon right now, you guys have seen, right? They're now down 23% from local highs. Anytime in the context of overall bull markets, you can find Amazon down over 20%. It's usually been a very good opportunity, except for obviously this was an interest rate hiking cycle. But if you go back in the context of overall bull markets, anytime Amazon's been down over 20% from the all-time highs is usually a good buy. So buying down here is still a decent proposition, but pace yourself, go small, and play with the levels, right? Set yourself some percentages and some price points that you're willing to buy Amazon stock at, and respect them if ever they are hit. That being said, I am looking to play Amazon further down here, more specifically looking in the mid 150s down to the 150 range to make some good buying purchases. Now, In terms of the weekly, right? Weekly uptrend is obviously lost at this point, very unfortunate. So we will just be looking for a lower high, then up to the bulls to determine whether or not we can reset that with the size of the bounce, or if we're just due for further consolidation. And unfortunately on the monthly, guys, Amazon has now lost the monthly time frame as well, which is why I say be patient with this one, guys. They are not going to V-shape this. Most likely, if anything at best, it is going to be a two-step recovery process, something like this. So we will have some time to be picking up Amazon, but I really like it down here in these lower levels. Great also support range from 2020 and 2021. That is the bottom end of that range. So the bulls should be able to support it quite nicely. Moving on to Google right now. Give me a quick second. So moving into Google, down about 4.61%. Google continues to get crushed, unfortunately, down, right? Daily downtrend in motion, continuation of that daily downtrend. Watch for the size of the bounce, watch for the hourly uptrend recapture. If they don't recapture the hourly uptrend, of course, then you know that your daily move down is simply not finished, right? But if they do recapture the hourly as of tomorrow, you know your daily bounce is underway, and then you measure the size of the bounce, right? Size of the bounce is key. If we get all the way back up to at least 166 on the fibs, that means the bulls have a decent enough chance at resetting this into a daily uptrend. But keep an eye on this overhead resistance, and this is going to play into the next time frame, 180 down to 171. Keep an eye on the weekly, guys. Loss of the weekly uptrend, right? So if we get a little bit of a retracement up here from the bulls, just keep an eye on this resistance. May just be looking for a lower high and then a revisit of the lows or even lower. Couple that with the fact that we are currently in monthly consolidation, and the biggest level on the monthly is down here, this green box, 152 down to 144. If Google continues its slide down here, already we are having a very good discount on Google, down about 18%. Go back in the context of most bull markets and you'll see Google down anywhere 15 to 20%, except for during an interest rate hiking cycle, of course, has usually always been a great proposition to be buying this stock. So keep in mind, if we continue plunging down into this green box, that will be a sell-off of 20 to 25%. Even better buying opportunity for such a solid company, guys. I want to remind you that even though we've sold off a lot, has any fundamentals of any of these companies changed at all? No. And what happened during 2022? All of these businesses focused on profitability. They're now running leaner businesses, focusing on costs and profits. So now they do have enough. In terms of free cash flow and cash on hand to weather any sort of soft landing economic downturn that we might be able to see, right? Which is why I do think it's a great buying opportunity down here. I will continue to buy little amount of shares even at these levels, but down here is where I start to go a little bit more heavy on Google. Moving into Meta right now, Meta recovering very nicely today, as a matter of fact, down only 2.54%. Meta doing a great job of trying to hold this support level on a daily, right? 482 down to about 454. This is my buying opportunity zone on Meta for a first little nibble. The second one comes at the lower 435 to 420 level, and the third one really comes at 410 down to 400. That being said, Meta, loss of the daily uptrend, of course, right now, right? So we might just be looking for a lower high. Keep an eye on the size of the bounce right now. Size of the bounce is about 38%. Need to see a little bit higher, 490, all the way maybe up to 500, giving the bulls the best chance of maybe resetting this into a daily uptrend. But if the rest of the markets continue their slide here, guys, may just be looking for lower high into lower low and breaching some levels to the downside. Keep in mind, we are now at a loss of the weekly uptrend for a few weeks in a row now, so we may just be looking for a weekly downtrend. Breach of 442, that would officially be a weekly downtrend on Meta and may just bring us down to my more opportune levels, 430 down to 400. I want to be buying as much as possible of this stock if we do come down here, guys. The valuation on this one is incredible. So much free cash flow, so much profitability, looking very good. And right now, still just monthly sideways consolidation, right? So still not a monthly in jeopardy of losing any monthly trends as of yet, which is why I still think down here is a great buying opportunity for Meta. I'm not even opposed to buying a little bit here, but small, guys, small. Down as we go lower, right? 450 and below is where I nibble more. A little bit here, then I get a little bit heavier, 430 to 420, and then I get more heavy down here in the 410 to 400, right? So keep that in mind. That is my buying plan for Meta as a whole. I think tomorrow what I'll do on the charts, guys, is I'm gonna put lines like yellow, orange, and maybe green for my optimal buying locations, right? Like small, medium, and then heavy for all of these. Maybe it'll give a better indication. Moving on to Microsoft right now. Microsoft, one of the most solid companies in the games, guys, right now. They are down 3.27%. Such a gorgeous gorgeous buying opportunity for Microsoft. Keep reiterating it, right? Reiterating it. So moving on in, daily downtrend is clear as day right now. So that being said, we are still just looking for a daily recapture or daily bounce on Microsoft right now. Oversold conditions on Microsoft, guys, right? Most of these right now are oversold. Amazon is oversold. Google, oversold conditions, which is why we need to be playing them. And Microsoft as well is daily oversold conditions. I was saying last week, I will be playing short puts on oversold big tech names, right? Only the magnificent five, pretty much. So, pretty much Apple, Amazon, Google, Meta, and Microsoft. NVIDIA, I did play it, but extremely conservatively. I'll show you guys that after. So Microsoft moving down, guys, looking for the size of the bounce. Once again, keep an eye on your hourly uptrend. Now we have the hourly uptrend in motion. So your daily bounce is underway. We need to be watching for the size of the bounce, of course. Size of the bounce right now, weak. Need to see at least 407. Get me out of this area of support. We are still respecting it. This is the lower L area of support right now, right? 402 down to about 390, respecting that a little bit. If we can get above it, gives the bulls a chance to reset this into a daily uptrend, but come too low of a bounce, right? And we may just revisit lower lows, coming down maybe into the 480 levels. That being said, loss of the weekly uptrend. Any bounce on the weekly, probably looking for a weekly lower high, and then maybe revisit the lows. I love these levels on Microsoft, guys. Can't ask for a better level, to be saying the least. Down 16%. Usually it's always been a great opportunity to buy Microsoft when it's down 16, 20% in the context of an overall bull market. So I do maintain this is a great buying level. The next big buying level is down here, 376 to about 360-ish. That's when I go a little bit heavier on Microsoft, and 350, 340 is an extreme heavy buy for me. That will be pretty much 26% off the all-time highs. So looking very decent on Microsoft, but once again, stay focused on the size of the short-term bounce. So buying in this zone, yes. Then we get a little bit more heavy down here, and then we get a lot heavier all the way down here, right? Still, daily oversold conditions, we have to be buying something. Moving into Netflix right now. Netflix as well, down about 2.46%. Daily downtrend simply continues, clear as day. Still going to be watching for the size of the bounce, right? Size of the bounce is key. As of now, not that big of a bounce, only about 30, not even 25%, right? Need to see it bounce at least to 618 to give the bulls the best chance at resetting this into a daily uptrend. But unfortunately now, guys, we have lost this big area of support by the bulls, right? So now, unfortunately, you have to change this into a resistance box. So now they will be working overhead with that. If ever we reject from here and continue trending lower, that would be normal, especially after losing the weekly trend like this. Could just be looking for weekly lower high into lower low. And where are we heading? Maybe into the lower low section. That's going to be 571 down to about 523. This is where I get a lot more interested in buying Netflix stock in this whole area of congestion, right? So if we come down 520 down to 500, that's where I really want to start dollar cost averaging into Netflix right now. Still a little bit too high for me right now. I want to be greedy with this one just because of the overall context of the markets. So this is where I'm going to be playing Netflix myself. As of now, though, guys, the bulls really need to put a stop to this bleeding. As of now, they're down about, 15% from the all-time highs. I'm looking for more, something like 20 to 25% myself. Now moving into NVIDIA. So NVIDIA had a very volatile day, guys. At one point on the morning, they were down 15% top to bottom from Friday close, and they were able to recover pretty much more than half of that, only down pretty much 6.36%, right? This morning opened up a heck of a trade opportunity because NVIDIA usually has more volatility than the rest. I was able to write short puts at 75, guys. I was able to write short puts at 75 for $1, $100 for those. It was very, very good. Weeklies as well. So that is the type of trade I'm going to be looking to play on NVIDIA, guys. Extreme moves to the downside, looking way, 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 way below the current share price. Do not play NVIDIA close. You will probably get taken through the washing machine. Not saying you might not make profit, but it'll be an emotional journey to say the least, right? So NVIDIA currently daily downtrend clear as day. We'll be looking for the size of the bounce once again. And if ever we get a decent sized bounce, guys, keep in mind your daily levels, right? So looking for a bounce at least to 50%, almost there. If we can get above 105, sets up the bulls maybe for a daily trend change attempt. But anything under that, unfortunately, will probably result in a further sell down. We are now operating at the last line of defense here, guys, that I've labeled on the chart. Huge prior all-time high resistance, now going to be acting as support, but we did break it. So right now, what are we looking for? Maybe just a weekly lower high into rollover. So even if we continue, guys, this daily bounce right here into earnings, any underperformance by NVIDIA may just be met with further sell down into further weekly downtrend, into further monthly consolidation, guys. And right now, NVIDIA still does have a monthly uptrend, looking for a monthly higher low, which is why I like this level, guys, 84 to 75. I think the bulls will look to protect this with their lives, which is why this is the area that I want to play more aggressively myself. $100 to $90, I agree, could be a decent area for a nibble, but I want to be very greedy on this one, guys. 85 to 75. You guys have seen the type of moves that this market can put in, right? So just be very cautious. Be greedy with it, guys. Be very greedy with your levels, because you know this market can get very volatile very quick, and just in a few short weeks, we can drop a lot more. Now, moving into Tesla. So Tesla obviously down again. So down 4.23% in the context of a daily downtrend. So we'll be watching for the size of the bounce. As of now, the bounce decent, but nothing to cry home about, right? So hourly uptrend is clearly in motion. So we have a daily bounce underway. We will need to see at least 50%. So at least up to about 210. If we can get up to 210, sets up the bulls nicely for an attempt at a daily trend change. But we are still just looking for a daily lower high and possibly a revisit of the lows, right? So keep that in mind, guys. Tesla is in a daily downtrend, heavy weekly momentum to the downside as well. And now we've pretty much given back all of the weekly move, which is why, in my humble opinion, even if we do get a daily uptrend formation, we may just be looking for a weekly lower high and then revisit of the lows here, guys. The big area of support, we have now breached it, right? This was 220 to 200. We are now below that, below the $200 mark. So the next big area comes in this zone right here, 180 to 170, where the bulls put a stop to the damage earlier on in the year. That is maybe a next level of contention for the bulls. Unfortunately, I am not going to be playing Tesla in this type of market, guys. If companies like Microsoft can't hold it up, then Tesla will definitely not have a good time either. So I will be foregoing making any plays on this company whatsoever unless we get very extreme drops and head into big daily oversold conditions, which you are very far from hitting right now. I will not be playing Tesla as a whole. In my humble opinion, you can wait. If you want a dollar cost average as a long-term investor, guys, just be very, very patient. You guys know the market will open up more opportunities. If wherever we see 160 to 150, I may just consider it again. But as of now, I am staying away with this market narrative. Now, lastly, Palantir. So Palantir, we obviously just covered their earnings, but as a whole, you just need to know that they're up to 27. So they've now recaptured all of this daily move to the downside, right? So huge engulfer right now. We will see. Can they keep the daily uptrend alive? So let's say they retrace a little bit of this earnings move. They have some decent support below us, 26 down to 25, which was your previous resistance and support zone. So now they're back above that. Could be able to use it as support and then maybe reset into a daily uptrend. But if these markets have proved us anything, Palantir may not be able to do it alone. If the weakness continues, expect maybe further declines. And then we maybe just be looking at, guys, a furtherance of a weekly wide weekly tightening range into maybe Q4 when maybe the market outlook looks better. One thing that I have to say for sure about Palantir, because we can't rely only on Palantir's price action, right? I would love to say the bulls have this back and we're going to new all-time highs, but if the rest of the market doesn't cooperate, guys, Palantir is not going to do it on its own for sure, right? So best case scenario, a long-term tightening range. If you want the best value proposition on this one, I may be just waiting myself for $24, $23. If the stock does come down a little bit from these highs and these lower areas right here, I'll be writing short puts, guys. $23 to $22 with the volatility could be a great point of entry. So that is my specific strategy on Palantir. The technicals look great though now, right? Monthly uptrend, clear as day, right? Weekly uptrend is still, our weekly recapture right now is looking very good. Daily recapture is looking very good. It's just the rest of the market will be weighing Palantir down, right? So keep that in mind. That's pretty much everything in terms of our technical analysis for today. Now let's take a very quick dive into my portfolio to see what type of trades I've opened for the week, which will pretty much be the style that I'll be adopting moving forward, okay? All right, guys, so taking a look at the positions right now, you will see that we have played defense more than offense over the course of today, and especially over the course of the end of last week. So first defensive position was AMD. We got assigned AMD just last week, and we went protective with it right away, right? So we went with the in-the-money $120 calls for $14.29. We are pretty much just capping the loss. If ever AMD runs above 140, well, obviously we will not make any profit, but if ever we come below pretty much where the loss is pretty much right now, the 120 plus 14.29, which is 134. If ever we come below that, at least we're not losing any more money. So I will keep this covered call strategy in place until the market shows more broad signs of recovery. Until that time, I will be running a more defense-based strategy and just capping the loss, right? And then eventually, when the markets do recover, I will take this protection off and we will be looking to ride it to the upside. Now, in terms of Amazon, another assigned position, we got assigned at 190. Same concept. You may remember from last week, we had two very juicy covered calls in place and we collected almost $1,600 across those. Now we still have those covered calls in place and we rolled them simply 1 week forward, right? So our average cost on Amazon right now is probably closer to about 176. And you can see we wrote the Amazon $160 covered calls right now for this week. Once again, capping the loss. If Amazon drops below 160, at least we are collecting $550. We will be able to reduce our cost basis even more and chase the stock to the downside. Eventually, we will be removing this protection and starting to write strikes above Amazon's current price. But I will keep this one in place for the foreseeable future as well, until we can see some better momentum across your indexes. Now, moving on further, guys, I did not average into ASML anymore. No change into that position right now. I will be waiting maybe for the 700s. I know that we briefly tapped into those over the past couple of days, but I'm just not convinced that maybe this is the bottoming out process. If we see any further downside, I'm looking to average in maybe around the 750 mark, maybe for 2 more shares. Now, in terms of BITI, this is pretty much our inverse Bitcoin, so short Bitcoin 3 times leveraged. I saw the writing on the wall pretty much for risk off assets, and we made a juicy profit on those. We had 10 contracts leading into today, which our average cost was around 34 cents. And you can see, guys, we closed them very, very healthily. A few early on in the morning here, guys, we made almost, a 3.5x on these. We sold half the position for $1.20, realizing a very juicy $600 profit on those. Then over the course of the day, we sold 3 more for about 98 cents. So almost a 3x on those as well, right? And now we are just holding 2 simple contracts if ever Bitcoin continues declining. But I wanted to make the most of the volatility and the magnitude of the drop today, right? To realize a lot of the profits on that Bitcoin trade. Still holding 2 contracts, and we are up still a decent amount on that position, right? Total net profits on this position have been very good, well above the $600 mark. Now, moving into our rather, it's going to be closer to $1,000 when we're all said and done, right? So very, very juicy trade on this one as a whole. Now, moving on further, guys, you see that I also have some Google shares that we got assigned just last Friday, pretty much, at a 169.66 or 2 Fridays ago, and we went and played defense on this one as well. We have in the money covered calls. This is now the 2nd week in a row where we've written covered calls on the position. Last week we had the 170s. We collected $270 in premium. Our average cost on Google now is about 167. So very good. 162.5. The calls $6.31. So now 162.5 plus 631 is about, let's call it for all intents and purposes, roughly $169. So with these covered calls, even if Google were to expire this week over 162.50, we would still be above our average cost with all the premium collected. However, if we end under 162.50, we collect all of this $630 and we will just add that to our average cost of the downside. And I'll be looking to play this protective strategy moving forward on Google the entire time the stock is down. I will be looking to get more and more premium and average into the Google position as it drops, maybe with 1 more contract in the 150 range. Now, moving on to Meta. So Meta, this one has not changed. We've had this one for the past couple of weeks, still a bull call debit spread for October, 480s versus the 490s. In the event of recovery, we're still slightly up on these. Now, today, what we did right is a bull put credit spread, guys. So put credit spread, 422.50s versus the 420s. So far out of the money on Meta. And what I may do for this one, guys, if ever we break down below the 422 range, I may just close the long side of the puts for a profit, and I may just take assignment of the short side of the puts, guys. But all in all, we wrote these early on in the morning when the stock was trading roughly around 460, and that would put us on a total weekly drop, guys. Since last Friday, that would be a drop. If we get assigned all the way down another 13%, decent support down here. I'm taking the chance on those. Looking fairly good though, guys, on Meta, as you can see. We wrote them for about 11 cents minus commission. It's about 10 cents, but the spread is only 250 bucks, right? 10 divided by 250, that's a 4% return in a given week. So looking good. Those are the type of plays with put credit spreads I'll be looking to make on Meta. So far out of the money, guys, in a big area of support. That is what I'm going to be looking for on put credit spreads on Meta, and Microsoft, right? Only the ones that have very high share prices that I might not be willing to do full short puts on. Microsoft, however, we did add to the position. We bought 2 shares of Microsoft over the course of the morning. You will see those down here. We bought 2 Microsoft shares at $9.35 right at the open here, guys, for $389.87. So we're just DCAing and building a tiny little swing trade position on Microsoft. We now have 9 shares at an average cost of $4.15. I'll be looking to average more and more into this, guys. If I can build this short-term swing trade position up to 20 shares, that would be a good enough position for me. Now, moving on in, we also have this bull call debit spread. That is not changed, guys, that we took last week pretty much for the end of August, 430 versus the 435s. We are now underwater on those. We'll see how far those last, but we only spent about $225 on those. We did write some short puts on Microsoft, guys. One short put on Microsoft, the 365s, right? And we got this one as well relatively early on in the morning. We filled this one shortly after the open at 9:53. We got pretty much $182 for them. So pretty much exactly 0.5%. We are now in profit, but keep in mind, guys, that is a long way for Microsoft to drop this week, which is exactly why I took it, right? That would require an extra drop by Microsoft. At the time I wrote this option, we would need another 7% drop on Microsoft, and that will be coming into a very, very large area of prior support. I would not mind being assigned Microsoft down here. That's the only reason I took the trade here, guys. Daily, we're looking pretty good. Daily oversold conditions. It's a huge level down here, which is why I want that trade. So looking very good. Those are the types of trades I'm going to be taking on big tech. Daily oversold conditions and way out of the money. If I can find 0.5%, guys, usually should be a very profitable strategy while being quite defensive, right? Moving on down through the list, we took some Palantir trades for the earnings, right? So we wrote these set. There was so much premium, guys. Palantir was down so much today. I was pretty sure they'd have good earnings, but I wanted to buy the stock here if ever it did come down here because the valuations would be better, and I knew the company would be doing just fine. We wrote 2 times $17 puts for 22 cents, over 1%. I'll take that every time. And $18 puts as well for 24 cents. Those will all be worthless tomorrow. So tomorrow we should be collecting pretty much the summation of these two, pretty much almost $90. So looking very good on that. And then we took another trade, guys. Pretty legendary trade right here. You will never see me play the VIX. And I stress never, right? Because of how uncertain of an index it is. Usually I will only play the VIX when we start hitting historical records. So SVXY, if you don't know what it is the inverse of the VIX. So usually when we see a tremendous move to the upside like this on the VIX, I want to be short the VIX because we know it will not last forever. So what I chose to do is I chose to go with straight shares, 25 shares at 40.71. These were done extremely early on in the morning, guys. Look, 10 minutes pretty much. 5 to 10 minutes after the open, I was into these trades. So I really almost clipped the top. You would have had to go really pre-market, right? Pre-market would have been the actual top. At the open, I got really as close as possible to the top as you can possibly get, right? In terms of being able to do it with options. So moving on down, we took some options, guys, and I went with in the money call options. Now, the reason that you see that this position is down right now, we were actually up a tremendous portion of the morning, right? We were actually up decently on this trade. So when the market's bottom, pretty much right here, right? This is the inverse of the VIX, and you can see we were doing nicely because the VIX was coming down. And then unfortunately it unraveled over the course of the day as the VIX gained back a little bit of its levels here, guys. You can see it's nowhere close to where we got in though, but because of the premium, this is so funny, guys. We're trading the VIX, but the VIX came down. So obviously the extrinsic value of the option, right, got compressed a little bit. That is the moral of the story. So that is why we're currently down a little bit on these options, but at least I went in the money to minimize the impact of that extrinsic value. So we went with the $30 calls for the end of September. I gave myself a month and a half of time to be sure that the VIX has time to come down and really crush, or rather, crush the long VIX options, but really make our options go deep in the money, right? So $30 call, we paid $13.50. At the time, you can see where we are at, 40.71. So at that point, I only had $3 of extrinsic value. That has now been brought down a little bit, guys, right? by about $2, which is why we are now at a net loss on this position. And we also got the $35 in the money for $9. So that was pretty much putting it at 44, which would have been almost $3.50 of extrinsic value on the option. Now, because that extrinsic value got a little bit crushed, right? So the IV crush is what hit me today, but that is not going to be the case forever, right? Now we're pretty much down to almost closer to true value of these in the money options. So I do believe that they will perform decently if we hold this and the VIX really returns to normalized readings of maybe in the mid 20s. We should be able to exit these options, guys, maybe at some decent gains. Think maybe 60, 70%, maybe even a 2x gain on these options, because SPXY will start gaining the levels higher, right? You can see they were literally just at $57. Now I know, yes, it's the inverse of the VIX. They're not exactly perfectly correlated, but usually they do move in opposite directions. So if we get a recapture of these levels and the SPXY moves back into the high 40s, even maybe low 50s, we should be able to close these options at very, very good values, and the shares as well. So I'm just looking for a little bit of a swing trade on those based off of historical volatility levels. So that's pretty much the gist of the moral of the story of all the trades. As I said, we'll be going over these more in detail, guys, over the rest of the week. So hopefully you guys enjoyed today's video. I apologize, it was a fairly long one. I promise the rest of the videos this week will be a lot shorter now that we've covered all the major bases of the recession narratives. Now that you guys know exactly what to do, we're going to be focusing more on the pure technicals and the pure trade levels and make the videos a lot shorter. So my goal for the week is to be making videos. Obviously, we do have earnings to cover and stuff like that, right? A lot of earnings this week, but my goal is to make these videos under an hour, preferably closer to the 45, 50-minute mark, encompassing earnings, technical analysis, and even the strategy and my own trades, right? So hopefully that makes sense, guys. Hopefully you guys are doing well. Futures looking like they're going to have a little bit of bounce. So maybe tomorrow is that green day that we've been looking for after today's disaster, right? Keep an eye though on the size of the bounces as we went through in today's video. So that's pretty much everything, guys. If you enjoyed it, consider dropping a like. Would really appreciate it for the growth of the channel. Consider also subscribing to the channel if you're new. We do these every Monday to Friday after the close. And lastly, guys, if you have any questions, now is definitely the time to be asking them down below in the comments. Anything you want, macro discussion, specific stock discussion, levels to watch out, options plays, anything you guys want, leave it down below and I'll get back to you as soon as the next 24 hours. So take care, guys. See you tomorrow after the close, and peace. Happy trading.